Shall we first up? Let's look at Euro CHF. Euro has been bearish since 2017. We had a break of structure. You see the break of structure. After a break of the supply move, price came on multiple retests, and since then, Euro CHF has been on downward spiral. So Euro has been on downward spiral since 2017, and here we have institutional flow and price maintaining lower low, lower high, 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 lower low, lower high. Continue to maintain that structure. A typical characteristics of a bearish trend. So we have here in 2017 a supply move and a break of structure and a retest and forming a descending trend line after three touches. A descending weekly trend line established since 2017. In a similar fashion, SMB continues to wire Euro. It didn't stop, it continues in that fashion till October 2022. And now we have gotten our floor, and this now will be our roof. On technical, it makes sense to wait for price to return to the roof. So we'll be looking at we want to keep this chart and wait if in the future price returns to the roof where we wait for Euro upswing. It's very sad that Euro has fallen below parity against Swiss national currency, Swiss franc. So this is what we have from 2017 with our price action. You see the future. There is no good trade for Euro CHF. There is no trade for Euro CHF. Let me explain something. Let me explain what. Institutional trading is strategic. Now you see the pattern price from since 2017. The money makers will never want to get into a trade at the middle of this place. They never want to be in this place, trading in this empty space. They only want to stay in two places, and that is where the no monetary policy changes come to. And you notice that when price is approaching the demand floor, you see a change in monetary policy. The Swiss National Bank, governed by SNB governing body, they will make up rules. Even if price try to leave this area, you will see them changing policies that will return price to that area. And the next thing you see is ECB will change rules again that will favor price. The moment you see price make its way to this side, you see change in monetary policy will erupt to push price back to target the roof, either a break of structure or a continuous buy or market will return back. So this is what we see. We're trading a weekly candle. Why are we doing the weekly candles? For clear directional buyers. So you will see that Euro CHF falling below parity. And we have here from the touch on the demand floor, a psychological demand floor that have kept price. They return to that level. Look at what price has done. That's the body of the candle. This is what we have. Clean break of structure that weekly time frame and price came back. That's the it's within the zone. So that sell off you see there is within the zone. It's within the zone. demand floor, price return a demand floor, break up a demand floor, hit again test. So we test sell off on that. So we have here as our supply roof, this is our supply roof, and this is our demand floor. There's a series of demand floor every time price is touched. So you can go long. So you see institutional trading, they are not into everyday trading. The moment price comes to this floor, they went long. So if you took a long position at this from here to here, it's a significant gain for you to get out of the market. Because now you see what Euro CHF is doing. The price is failing to update the roof and it's just trading sideways. It makes no sense to get into this trade. It makes no sense. So at this level now, you will see price established a structure at 0.92905 on the weekly time frame, using this as a support. Do I think this can be broken? Yes, this can be broken. This support level can be broken because price already established a descending trend line. You cannot see this if you're not on a weekly candle. So there's a descending trend line established at this level. So it makes sense to see price return on that descending trend line for you to look for potential buy opportunity for Euro CHF. So I will also mark it those potential descending trend line. So you have a descending trend line. I want to dot it and possibly change the color. And let's change it to blue. Okay. You see those color, those blue dots. Those blue dots are descending trend line, touch one, touch two. So it makes sense to see price return in that trend where you have a potential buy opportunity on the weekly. It might come there as a weekly rejection. And you look for opportunity to buy the market. So it's a little bit dangerous to try to buy in rather wait for sell opportunities if the market is heavily bearish. We had an experience in AED, USD in a similar fashion. So as CHF remains strong, trying to buy it is actually going to cost you a lot. So but that does not mean that a bearish market cannot buy. You can buy. Price have updated the floor 0.92571 three times. First touch, second touch, third touch, and the price is making its way up. So I think from that level, the European Central Bank might be doing something to try to at least bring Euro CHF to parity. So at this level, I don't think it's bad to try to long Euro CHF. I don't think it's bad, but if you are after precaution, it might not be a good idea. And if this pair hits up, if Euro sets up on the path of recovery, one of the things Euro CHF might be looking at is to at least return Euro to parity. And returning Euro to parity will be at this level, where I see a potential alignment in sell, which another represents a sell-off time for institutions, where the Swiss National Bank might come in again to try to see what's going on with Swiss franc. So at this level, I believe there will be monetary policy intervention at this level. So if we have prevailing fundamental analysis that is bringing price to this level, that could potentially set up a bearish move that will lead to a correction if we test a broken descending trend line, which will ultimately continue to see price, play in consolidation, which might likely break out the structure and continue to uptrend, which I think is unlikely because the Swiss economy remains strong and intact, and their monetary policies are tight. So they aren't playing like JPY. Swiss is not into that kind of play. They are not into play. So you see from 2018, they have been dropping euro. So what I see here, The most if you want to be really happy buy is to see that this structure is broken. If this structure is broken, then you now position yourself to buy from a break of a previous low. So if that low is broken, then we come down to this area. So we watch it to see if price manage to break out from that low before. But from where it is, I think euro might be setting itself up to close the gap, at least approach parity. And when price come here, because there's already a sell liquidity build up from 2018, most likely the structure will be broken. The probability is very high. And when we look again, some of the things that should give us a signal, we have a breakout from a descending trend line and a possible retest. This is a descending trend line breakout. So you see that this might be the whistle the European Central Bank has been looking for. So this might be the signal. This might be a signal that the EU might be taking it personal with the SMB. So if ECB manages to set loose and the strong monetary policy that defeat SMB, then we could potentially be seeing a change in the eurozone where euro will continue to upswing until at least approaches parity. So you see we have a breakout here, a descending trend line, a breakout and price retest one and retest two and it's going. So at this moment I think going long for Euro CHF will be a bad idea. Honestly, it will be a bad idea to go long on Euro. It will be a bad idea to go long on Euro CHF. It will be a bad idea after a breakout from a descending trend line. On technical, what should have happened if we are not having an economic twerk, would have been a price continue here to sell down to the floor where we have an alignment. But this have failed to happen. Rather, price broke the structure, broke what a descending structure, build up of liquidity sell, price broke it, turning all seller there to buy. Now, as price broke the structure, it came down to retest a broken supply route as a demand. So I expect a swing at this level. So that is why you see this level is being contested. 0.92571 is being contested by Euro and CHF. So I believe that strong fundamental analysis coming from ECB will technically push price away from this orbit to at least help Euro economy approach close parity. And whatever that brings price to this zone will technically bring in more liquidity, which will likely break the descending structure, the supply route liquidity build to be broken. Then we attend another break of structure where we have seen price retested after breaking the demand floor price came in on supply, price came in on supply after retesting the demand floor, and this is the demand floor itself built. So we also have another structure at this level. This will also be another defining moment, another break and retest at parity level. So here will be a litmus test. Here will be the first litmus test of Euro CHF. So if Euro manages to, if they manage to push price up to this level, they will confirm and they will be tested at this level. So at parity level, Euro will have to face its destiny if they are willing to overcome parity. If they are able to overcome that, then we begin to see Euro trade above parity. So at that level, then to open the gate for more bullish opportunity and can never tell. But I think if price manage to break parity, it might come to this level where we test. But this level must be respected. It must be respected because of its significance. After break of structure, price broke here, the demand floor. You can see the demand floor broken in the month of 22 February. A break of that structure returned price to retest and price came back again to retest the zone and why price didn't get to this level because we already have a demand floor invalidation. We have a demand floor retested and breakout. So technically, price stops here before getting to the first supply roof. So that was why this price action didn't get it. But when it will come here now, if we manage to break the descending trend line, technically price will come to parity for the test. So we must keep this parity zone open, hoping that price returns to parity where we see a potential respect or disrespect You must get one of them. It's either you are respected or you are disrespected, one of them. So what we watch here is when price approach here, we look at fundamental analysis. Are there fundamental analysis that will continue to push euro so that euro can overcome parity, because this becomes a psychological resistant trend line. A previous demand structure, break of a demand structure becomes the supply. We've tested one, tested two, right? We come back to tested three. A break of that structure will be on fundamental analysis. And what European Central Bank monetary policies are. If the central bank monetary policies are strong enough, it could break the structure and continue to see return to this level, trading above parity, which will restore confidence. Then we also look at euro bond. The next thing we look at euro 10-year bond. We look at their bond yield to see what euro bond is doing. We look at it shortly after now. Look at BFS.